Right now, Bitcoin feels quiet, not crashing, not exploding, just sitting there. And most people look at that and think, nothing is happening. But Cathie Wood just said something that completely flips that assumption on its head. She described a very specific phase, a pattern that shows up quietly, almost invisibly, right before Bitcoin makes its biggest moves. And the unsettling part? Every single indicator she pointed to is flashing right now. So if you've been waiting for a sign that something bigger is coming, you might want to stay with me for the next 20 minutes. Because what I'm about to break down, most people won't see until it's already too late. Quick disclaimer before we go any further. Nothing in this video is financial advice. This is an information breakdown, a thinking framework. What you do with it is entirely your decision. Now, if you're new here, welcome to the Wealth Continuum. This channel exists for one reason: to help you think earlier, see clearer, and stay ahead of the shifts that most people miss until they're already priced in. If that's the kind of content you want more of, hit subscribe right now. And then let's get into it. Let's start with some context. Because understanding who Cathie Wood is matters before you understand why what she's saying matters. Cathie Wood is the founder and CEO of ARK Invest, one of the most well-known technology-focused investment firms on the planet. She built her reputation by identifying and committing to long-term disruptive technology trends before they became consensus. She was early on Tesla, early on genomics, early on digital assets, and she has been publicly bullish on Bitcoin since before it was respectable to be. Now, that doesn't mean she's always right. Nobody is. But it does mean that when she speaks about the structure of a market cycle, she's not guessing. She's referencing frameworks that she and her research team have been tracking for years. And recently she said something that didn't get nearly the attention it deserved. She didn't just drop a price target. She described a phase that comes before the big moves, a phase that almost always gets ignored, a phase that most retail investors completely sleep through. And the reason most people sleep through it? Because it doesn't feel like anything is happening. Morning, afternoon, or night for you right now? Drop it in the comments. I'm always curious where in the world the wealth continuum is reaching. Now, here's the part that almost nobody is talking about. This phase she's describing, it's not just theory, it has a track record. And when you see how it's played out before, the current moment starts to feel very different. Cathie Wood has used the phrase bottom-forming phase to describe where we are in the current Bitcoin cycle. And I want to unpack that because it sounds dry. It sounds like something an analyst would mutter in a quarterly report that nobody reads. But what it actually describes is one of the most psychologically dangerous stretches of any market cycle. Here's why. When prices are moving sideways, when news flow is flat, when Bitcoin isn't trending and the headlines have moved on to something else, that's when retail confidence evaporates. People start to quietly question whether they were right. The YouTube comment sections shift, the conviction fades, and that's exactly the point. Because while attention drifts away, something else is happening underneath the surface. Liquidity is quietly returning. Not loudly, not with a press release, not with a viral tweet from a celebrity. Quietly, steadily, deliberately. And the entities doing the accumulating during this phase, they are not emotional. They don't need validation. They are operating on thesis, not sentiment. Hit, like if this is starting to make sense, because the next part is where it gets really interesting. But before we get to who's actually accumulating and how much, I want to establish the pattern first. Because without the pattern, the current moment doesn't land with the weight it deserves. Let's go back, not just to the last bull run, farther than that. Every Bitcoin cycle in its history has had roughly the same emotional architecture. Phase 1, euphoria. Prices run. Everyone's a genius. The coin dominates culture. Phase 2, the crash. Painful, fast, demoralizing. The same voices that were cheering are now saying it's over. Phase 3, the silence. Prices stabilize, volume drops, retail moves on. And this phase can last months. Phase 4, the accumulation. Smart money enters quietly, without announcements. The price barely moves, but the ownership is shifting. Phase 5, the ignition. And by the time the average person recognizes what's happening, the first 30, 40, 50% of the move is already done. Now, Cathie Wood has pointed out something critical about this pattern. It's not just psychological, it's structural. The silence phase, the boring phase, the bottom-forming phase, whatever you want to call it, is a compression event. Pressure is building underneath a surface that looks completely still. And if you've been watching Bitcoin at any point in 2025 or 2026 and thinking, why isn't anything happening? You might be standing right in the middle of one of those phases right now. Comment below, cycle, if this is making you rethink where we currently are. I want to know who's connecting the dots. Now here's where things start to break down from the traditional narrative. Because this cycle isn't just like the previous ones. Something structurally different has entered the equation. And Cathie Wood has spoken directly about what that something is. Let's talk about institutional capital. Because for most of Bitcoin's existence, the conversation around institutional adoption was theoretical. It was a someday argument. And then January 2024 happened. The US Securities and Exchange Commission approved Bitcoin spot ETFs. And the names attached to those applications were not small names. BlackRock, Fidelity, Invesco, WisdomTree. The largest asset managers on earth were no longer sitting on the sidelines. Now, let me be very clear about what that means, because a lot of people either overcelebrated it or underappreciated it. When BlackRock, the firm that manages more assets than the GDP of most countries, enters a market, it doesn't enter quietly in terms of scale, but it does enter patiently in terms of timing. They don't rush. They accumulate over months and years. And here's what Cathie Wood specifically highlighted around the time Larry Fink, the CEO of BlackRock, shifted his public stance on Bitcoin. He went from calling it an index of money laundering to calling it digital gold. That is not a casual opinion shift. That is a man signaling to every pension fund, every sovereign wealth fund, every institutional capital allocator in the world. There is now a credible, regulated path into this asset class. And once that permission structure exists, the pace of institutional entry doesn't slow down, it accelerates. Subscribe if you want to stay ahead of what's coming. Because the next phase of this story is exactly where most people are still getting it wrong. And this is exactly why this matters right now. Because institutional adoption isn't just about demand. It changes the supply dynamic in a way that most retail investors haven't fully priced into their thinking. Here's something that doesn't get discussed enough. Bitcoin has a hard supply cap of 21 million coins. That's not a policy, that's code. It cannot be changed without a consensus shift that has never happened and is extremely unlikely to ever happen. Now, on top of that fixed supply, you have the halving cycle. In April 2024, Bitcoin's block reward was cut in half. That means the rate at which new Bitcoin enters circulation was permanently reduced. Every halving in Bitcoin's history has been followed within 12 to 18 months by a significant price appreciation event. Not immediately, not dramatically, but structurally and inevitably. Because you are reducing supply into a market where demand is not disappearing. Now layer on top of that the Bitcoin ETFs. In the first full year of Bitcoin spot ETFs in the United States, the net inflows were staggering. These instruments pulled Bitcoin off exchanges and into custodied holdings that are not liquid in the traditional sense. So you now have a situation where supply growth is slowing, institutional demand is rising, and liquid supply on exchanges is shrinking. And that combination, compressed against a backdrop of improving macro liquidity, is essentially what Cathie Wood is referring to when she talks about the pre-bull conditions. What would you do if this thesis actually plays out? Drop your honest answer in the comments. I'm not looking for the right answer. I genuinely want to know how people are thinking about this. But here's where the conversation gets bigger than just Bitcoin as an asset. Because Cathie Wood isn't just talking about price. She's talking about a structural shift in what Bitcoin actually is, and what role it plays in a world that is about to change dramatically. This is the part of Cathie Wood's thesis that I think is genuinely underappreciated by most people in the Bitcoin community. She talks about technological convergence, not just AI, not just Bitcoin, not just robotics or energy systems, all of it at once, intersecting. And when multiple exponential technologies converge at the same time, the compounding effect is not additive, it's multiplicative. Think about where we are in 2026. Artificial intelligence has gone from novelty to infrastructure. Models aren't just answering questions. They're operating as agents. They're executing tasks, managing systems, making decisions with minimal human intervention. Robotics is following close behind. Physical AI, systems that operate in the real world with increasing autonomy, is moving from prototype to deployment. And energy systems are shifting in ways that will make the computational costs of all of this dramatically more manageable over the next 5 to 10 years. Now, where does Bitcoin fit into this picture? This is where Cathie Wood introduces a concept she calls agent AI. She's describing a world where autonomous AI systems, machines, algorithms, automated economic participants, need to transact with each other. Not occasionally, constantly. And when you need a settlement layer for machine-to-machine value transfer at global scale in real time, without the friction of traditional banking infrastructure, what do you use? A permissionless, neutral, globally accessible, mathematically scarce asset that any agent can hold and transfer without needing a bank account or a human intermediary. Bitcoin wasn't designed for this future, but it is perfectly positioned for it. And Cathie Wood argues this isn't speculative. It's a structural inevitability that follows from the direction of technological development. Are you positioned for this, or are you still just watching? because the gap between those two things is going to matter a lot if this plays out the way the data suggests. Now, what happens next is the real story, because once you understand the technological thesis, the price targets that Cathie Wood has put forward stop sounding crazy. They start sounding like math. ARK Invest's published research has outlined a Bitcoin price target range for the year 2030. The base case sits around $730,000 per Bitcoin. The bull case? $1.5 million per Bitcoin. Now I know exactly what some of you are thinking right now. You're thinking, that's insane. That's hype. That's the kind of number people throw around to get clicks. But here's the thing. The ARK research doesn't arrive at those numbers through wishful thinking. They model institutional adoption curves. They model portfolio allocation percentages. They model what happens when even a small fraction of global bond markets, equity markets, gold holdings, and emerging market currency exposure shifts even partially toward Bitcoin. The math isn't wild. The assumptions are actually quite conservative. If institutional adoption reaches the scale that ETF inflows are already suggesting it's heading toward, and if the agent AI thesis plays out even partially, and if Bitcoin continues to function as a macro hedge in environments of monetary stress, then those numbers aren't predictions. They're projections backed by compounding demand curves into a fixed supply. And history supports the direction, even if the exact number is uncertain. Let me put it this way. Every single person who called a previous Bitcoin price target insane when Bitcoin hit $1,000, when it hit $10,000, when it crossed $100,000, every single one of those people said the same thing. That's impossible. Share this with someone who needs to see it before the next phase becomes obvious to everyone. But here's the uncomfortable truth that almost nobody wants to say out loud. The biggest psychological barrier to capturing this opportunity isn't information, it's timing. It's the moment right before the move, and that moment has a very specific feeling. And it doesn't feel like opportunity. Every single Bitcoin cycle, without exception, has one thing in common. The phase right before the major move feels like nothing. It feels like waiting. It feels like being wrong. It feels like everyone who laughed at you might have been right. The human brain is wired to extrapolate current conditions into the future. When things are slow, we assume they'll stay slow. When nothing is happening, we assume nothing is coming. And that psychological wiring is exactly what makes markets work the way they do. Because if every retail investor recognized the accumulation phase while it was happening, it wouldn't be an accumulation phase anymore. It would already be priced in. The invisibility of the setup is a feature, not a bug. Cathie Wood has spoken about this dynamic directly. The fact that Bitcoin feels boring right now, the fact that the mainstream narrative has moved on to other things, the fact that confidence is scattered and attention is elsewhere, that's not a warning sign. That's the signature. It's the same signature that appeared before the run from 6,000 to 60,000. The same signature that appeared before Bitcoin crossed 100,000 for the first time. Every time. Not because of coincidence, because of the mechanics of how capital moves, how attention cycles, and how supply and demand interact across time. Do you think the system can hold without a major structural event? Drop your honest take below. No filter. I want the real conversation. And here's where the smart money is already moving. Because understanding the pattern is one thing. Knowing that people are acting on it right now, that's what changes the urgency of this conversation. Let's talk about what's actually observable right now. On-chain data has consistently shown that long-term Bitcoin holders, wallets that have held Bitcoin for more than a year without moving it, have been accumulating during periods of price compression rather than selling. That behavior is the opposite of what casual market participants do. Retail tends to buy when price is rising and sell when price is falling or stagnant. Long-term holders do the inverse. And during the kind of sideways periods we are discussing, the percentage of Bitcoin supply held by long-term holders tends to reach historically high levels. That means the available float, the Bitcoin that could be sold into a rising market, is actually shrinking even when price isn't moving dramatically. Now, add to that the macro environment. Global central banks have been navigating one of the most complex monetary environments in modern history. Interest rate cycles, inflationary pressures, currency debasement concerns, these forces don't disappear, they evolve. And Cathie Wood has repeatedly pointed out that Bitcoin's dual nature, functioning as both a risk-on speculative asset in bull markets and a risk-off store of value in crisis environments, makes it uniquely positioned in this macro landscape. It's rare, genuinely rare. Most assets are either risk-on or risk-off. Bitcoin, according to ARK's thesis, operates in both dimensions depending on what the market needs. If you've been watching this channel for a while and this video is finally making everything click, drop the word clarity in the comments. That's my signal that I need to go deeper on this topic, and I read every single one. What happens next in the cycle is something most people won't be prepared for, not because the information isn't available, but because they'll be too deep in the wait-and-see trap to act when the moment arrives. Now here's something I want to be direct about, Because a script like this, if it only tells you one side of the story, would be doing you a disservice. Nothing is guaranteed. Bitcoin has surprised people on the downside before, catastrophically. Cycles have lasted longer than analysts expected. Bear phases have extended past what models suggested. Black swan events, regulatory shocks, macroeconomic crises, technological disruption can compress timelines or shatter patterns. ARK. Invest itself has faced criticism for being overly optimistic in some of its projections. Cathie Wood's funds went through a brutal stretch during the 2022 rate environment that tested a lot of conviction. So why am I telling you this? Because the investors who have actually made generational returns from Bitcoin, and I mean the ones who held through multiple cycles, multiple crashes, multiple it's finally over moments, they weren't naive optimists. They were clear-eyed about the risks and the potential. They held conviction that was built on thesis and data, not just hope. And that's exactly what Cathie Wood's framework provides. Not a guarantee, but a thesis. A structured way of thinking about where capital flows, why, and what comes next. The question is whether you're engaging with that thesis or just watching from the outside. And this is why the next 12 to 18 months might be the most important decision window in this entire cycle. Here's what I want you to understand about timing. In every Bitcoin cycle, there is a window. A window where the information is available, the price hasn't moved yet, and the setup is clear if you know what to look for. That window doesn't stay open forever. It closes gradually, then suddenly. And the closing event isn't a single news story or a single price move. It's the moment when the narrative becomes so obvious that it has already moved markets. By the time Bitcoin is on the front page of every major financial outlet, by the time your colleagues are talking about it at lunch again, by the time the FOMO is thick in the air and everyone is scrambling to get in, the patient money that understood the boring phase is already up 40, 60, 80% or more. Not because they had better luck, because they understood the architecture of the cycle. That's what Cathie Wood is describing when she talks about the bottom forming phase. She's not just giving you a market view. She's telling you where we are in the map. And the map has been consistent across multiple cycles. Are you positioned, or are you still in wait-and-see mode? Now, here's the part that ties everything together, because the macro, the technology thesis, the institutional signal, and the cycle psychology are not separate stories. They are the same story told from 4 different angles. Let me bring this full circle. What Cathie Wood is describing isn't one catalyst. It's a convergence of catalysts. You have the halving-driven supply compression, already locked in by the April 2024 halving, building pressure into the 2025 and 2026 window. You have institutional adoption that is no longer a theory. It's a live, regulated, growing market represented by ETFs with billions in assets under management, backed by the largest asset managers in the world. You have a macro environment where the long-term purchasing power of fiat currencies continues to face structural headwinds, not just in emerging markets, but globally. You have a technological convergence thesis, AI, robotics, blockchain, that gives Bitcoin a role in a future economy that is far larger than just digital gold for retail investors. And you have a psychological landscape where retail attention has temporarily shifted elsewhere, creating exactly the kind of quiet that has preceded explosive moves in previous cycles. None of these factors in isolation would be sufficient to make a confident case. But together they form the kind of multi-factor setup that Cathie Wood and ARK Invest have been pointing to. And the real question, isn't whether Bitcoin will eventually reflect the value of these converging forces. The question is whether you will be positioned before that reflection happens, or whether you'll be watching from the outside when it does. Subscribe if you want to stay in the conversation, because the next few pieces of content on this channel are going to go even deeper into what this transition looks like and how to think about positioning within it. Here's the uncomfortable truth. Most people will not act on this information, not because they don't understand it, not because they don't believe it on some level, but because acting in the quiet phase feels wrong. It feels premature. It feels like you might be early and therefore exposed. And here's the paradox that every serious investor eventually comes to terms with. Being early and being wrong feel identical in the short term. The difference only reveals itself in the longer window. That's not a comfortable truth, but it's an honest one. The investors who captured the previous Bitcoin cycles, really captured them, not just caught the tail end, almost universally described the same experience. The setup was clear, the waiting was uncomfortable, the doubt was real, and the outcome eventually vindicated the conviction. Not because they had a crystal ball, but because they understood the structure well enough to sit in discomfort and not confuse discomfort with being wrong. That's the mindset Cathie Wood operates from. That's the framework she's describing. And honestly, that's the mindset this channel is trying to help you build across every major wealth topic we cover here. So let me leave you with this. Right now, Bitcoin feels quiet. It feels like a period between stories. But if Cathie Wood's framework is correct, and the historical pattern, the institutional data, the supply dynamics, and the technological thesis all point in the same direction, then this quiet period is not empty. It's loaded. Loaded with accumulation, loaded with structural positioning, loaded with the pressure that eventually becomes the next chapter. The calm before the biggest financial shift some of us have ever seen. And you just watched 20 minutes of it being explained in detail. So now the question is yours. What do you do with it? If you found real value here, share this video with one person in your life who needs to see it before the window closes. Not to convince them of anything, just to give them the information. If this is your first time on the wealth continuum, subscribe. Because this channel covers Bitcoin as part of a much bigger picture, macro, wealth building, and the structural shifts that are quietly rewriting the financial landscape. And if you've been watching for a while and this video finally made the picture click, drop the word clarity in the comments. That's my signal to go deeper on this topic, and I genuinely read every single one. One last thing, I want to hear from you. What do you want the next video to be about? Drop your suggestion in the comments below. I'm building this channel around what you actually need to understand right now, and your suggestions directly shape what gets made next. I'll see you in the next one.